What's going on, everyone? I hope you guys all had a fantastic trading day. Myself, along with a lot of members in Evolution Traders community today, caught some fantastic trades, and I want to outline one of those trades because the setup was crystal clear. By the way, guys, we're about halfway through enrollment where we've got about half the seats filled inside of Evolution Traders. Now, here's the cool thing that's going to happen as soon as I fill up all of the seats, where I've still got multiple seats available to join the community, get access to the course and stuff. Right now, we're doing live trading sessions where I jump on a conference call, I screen share, I go over the levels and the price action in real time about 2 to 3 days a week. As soon as the class is filled up, as soon as we fill out the room and we build our team to 100% completion, we are going to run 5 live trading sessions starting at market open, going till at least lunchtime. So if that's going to be something of interest to you, make sure you guys join. It's honestly cheaper than a cup of coffee a day, guys. That link is down in the description box below. Now, the setup that I want to show you guys is very simple. If you guys are not using daily moving averages on your intraday charts, you are doing yourself a huge disservice. Because daily moving averages, again, if you don't have multiple monitors, you don't have multiple charts, maybe you don't even know where your daily 50 SMA is. Maybe you don't even know where your daily 20 or 10 SMA is, where your daily 200 SMA is. And a lot of times when price action is in motion and things are looking, seemingly perfect, all of a sudden at the drop of a hat, things turn around, right? And that's exactly what happened today. And we caught a fantastic long bounce off of our daily 20 SMA. Now, the daily 20 SMA is right down here. It's the purple line that you see on my charts. Price point was sitting at 18,754. So today is April the 23rd, if you want to go back and back test. Now, to start the day, there was some opportunities to go long, but it wasn't the easiest. Okay, I'm not going to by any means say that the open, like the first hour and a half, was an easy market to trade. There was some continuation to the upside. There was some scalps to the upside. I was a part of the pre-market high break, back test, break, retest, and go. But again, there was one point in time where I was in 35, almost 40 points worth of drawdown before I finally took 35, 40 points of profit. So a little bit tricky. Again, you kind of have to manage your position sizing a lot more, tighter to the vest, meaning right now, I've completely ditched trading mini contracts. I'm trading multiple micro contracts and putting up the same amount of numbers. Today, we did $685 trading micros. I mean, like, come on, guys. Like, what more can you ask for? So with this being said, you had some choppiness action. We put in a high at 19,165. We kind of pulled back into my rising 20 intraday moving average. Bounced around a little bit, failed, right? Right here, we failed to push higher. So off this pullback, normally what you would want to see is if the moving average is rising, normally you want to see, even if it breaks through, you want to see a quick reclaim, consolidation, and then you want to see a push higher. And ultimately what you want to see is a breakout over the previous swing high. Now, the swing high would have been the high of day at 19,165. If you don't get that and the market kind of starts rolling over and you start losing that intraday 20 SMA, then essentially you could start looking to the downside, right? And the big level, I know a lot of us took this in the community today, but there was a pre-market high here sitting at 18,973. Look at what happens once we broke 8,973. We broke it, we kind of spiked back up, it tried to back test on that same 5-minute candle, and then just proceeded to push down. So this was a fantastic short trade. The trade that I want to highlight was right here. Because after this sell-off, right, after this pullback, after this back test, whatever you want to call it, this market pulled back right into our daily 20 SMA. Now, your daily 20 SMA, your daily 10, your daily 5 even, your daily 50, your daily 200 off the daily charts, those levels are going to be significantly stronger than your 20 SMA on a 5-minute time frame. Like, this 20 SMA is going to hug the price action. It's going to bend and weave and bend and curve. Your daily moving averages are essentially, they're going to pitter patter around a little bit, but it's essentially going to be a flat line, and it's going to be a hard level that you can play off of. When we pulled back, all you're looking for is one of two types of candles. Doji candle, signifying pause, break, rest, potential reversal, or hammer candle. Okay? That's all you're looking for. Pull back into supply, pause, take a deep breath. Looking for a green candle, take out previous doji, green candle, take out previous hammer candle, fire long, very minimal risk. And why is it minimal risk? Because if you bounce, let's say, and you get in long and it gets rejected and it rolls over and it loses that current low of day, you are out 100,000%. Look at how small your risk is. Essentially, now again, this is easier said than done. And I don't claim to be someone who comes out here and tells you guys, trading is so easy if you just learn this magic strategy. I will never say that. There's a lot of psychology behind this. There's a lot of emotions. There's a lot of practice. There's a lot of experience. There's a lot of discipline. There's a lot of consistency that goes involved in trading. So by no stretch of the means am I saying that this is easy. But if we are patient, and we have to practice that, and we know what we're looking for, okay? That's the key thing. If we know what we're looking for, we can essentially wait for setups that are going to provide the least amount of risk with great or better potential measured moves profit, okay? So by taking this long here, okay, you would take profits in one of two places. We already know where our stop's at. That's very clear, right? We're looking for that doji. We're looking for that hammer off of a significant area of support, okay? Because we're pulling back, we're looking, where are we going to find support? Was it going to be Tuesday's highs? That would have been another area. Was it going to be my key level down here at 18,659? Or was it going to be the daily 20? Well, it turned out to be the daily 20. And if you look at it, essentially, you were going to get into this trade as soon as we engulfed that, small little doji hammer candle looking thing. And you were going to get into this trade over 18,788. Let's call it 790. Okay, let's say there was some slippage. You get in at 790. Your stop loss is any candle that breaks and closes below your daily 20. And that would have been 750. So you were essentially putting on 35 points of risk. 35 points of risk. Again, going to be difficult to do if you're trading 10 minis like an absolute lunatic. But if you're responsible, trading normal size, then in this particular move, you risk 35 points on any close below your daily 20, and you have one of two areas to take profit. First area to take profit is into your 20 SMA intraday, which from 790 to 890 was 100 points. Guys, let me say that again. From here, right? From here to here was 100 points. Okay? And this took a matter of 5, 10, 15, 20, about 20, 25 minutes. And it's 100 points. I mean, by golly, guys, we had one first 5-minute candle that was 95 points, right? This is 95. I mean, I'm sure 90% of us were taking profits here at 40, 50, 60, 70 points, right? So this was a 100-point move. This is what you're looking for. Again, you could have just waited. And if you're asking the question, well, why would I have not gone long? Why would I have not shorted here? Why would I have not shorted that breakdown? I'm just putting things into perspective. Okay, because there was definitely trades to go long. There was definitely, look at this doji candle here. There was definitely indicators to go short. I have a 20 SMA strategy that I use. Most of you guys are familiar with. There was a short here. There was a short here once we dropped down below pre-market lows. Yes, I understand it. There was multiple trade setups. But what I'm saying is you don't need to sit there and hunt every single setup. Wait for one setup that you know, that you love, that you can profit on, that makes sense, and essentially you're a one and done trader. 1 hour trade day mentality. If you can sit at the charts for 1 hour at a time and pick the best potential setup to fire your shot, you're going to do a lot better. By the way, guys, if you want to jump into that room, Want to fill up the classroom, want to fill up the community, you get access to my course, you get access to the community. And as soon as we are at 100% capacity, we are rolling out 5 days of live trading, live commentary, each and every single market open until at least lunchtime. Take advantage. Also, guys, 24 hours left. Apex, 90% off. Use code DAnthony. I'll see all of you guys on the next video.